In this presentation, we will enter a reversing entry related to unearned revenue. Let's get into it with Intuit's QuickBooks Online. Here we are in our Get Great Guitars file. We're going to be opening up our old reports down here on the bottom left, the standard reports, that being the balance sheet report first. We're going to be changing the dates up top from 01/01/20 to the cutoff date 01/01/20 of 02/29/20. It's February 29th, 2020. We're going to run that report. Right-click on the tab up top, duplicate the tab up top, go to the tab to the left, go down to the reports on the bottom, open up the other favorite report, that being the P&L, profit and loss income statement. We're then going to be changing the dates up top for it from 01. It won't let me do it. Why isn't it letting me do it? It's going to be 01/01/20 to 02/29/20. We're going to run that report. Then I'm going to go back up top and right-click again and duplicate that tab. So then let's open up one more report, and that's going to be the customer balance detail report. So I'm going to go down to the reports down below. I'm going to go to and I'm going to search for this one because it's kind of in the bottom somewhere. Customer balance detail. That's the one we want. That's the one. You're the one, Wyatt. And then I'm going to right-click on the tab up top. I'm going to duplicate that tab up top. Then let's go back to the balance sheet, and we have our reports open. Close up the hamburger, hold down Control, scroll up just a bit to the 125. All right, so here's the story that happened. You'll recall that in accounts receivable, we had a negative receivable that happened as of the cutoff date. So if I go back to the customer balance detail report, you'll recall down here in this bottom one for the string music, we had this basically negative receivable from string music. Why? Because string music came into the store and they said, hey, we want a guitar. And we said, great, here's one, but they wanted a different color. So then we were like, well, we'll buy you one, but you got to give us a down payment to make it worth our while to make sure that you're going to come back into the store and finish the payment. So then we got this down payment for it, which normally you'd put on the books, like on the balance sheet, as a liability down here called unearned revenue or some kind of deposit in the liability section for the deposit until you've actually done the work. However, in QuickBooks, logistically, I can't track the customer or apply that prepayment to an invoice as easily if I were to do so. So therefore, we put it in the deposit screen as a negative accounts receivable, as many people do, because that makes it logistically much easier for me to then make the invoice when the guitar gets here, tie out the credit to the payment, and therefore tie this out to the payment. But it was a negative receivable as of the cutoff date, and we can't report a negative receivable as of the cutoff date. We have to do it properly. Therefore, we're going to do an adjusting journal entry, which we did, which was to increase the accounts receivable and put the other side into this liability account. But we just did it for the cutoff date. We only did that for the cutoff date. Here it is in the unearned revenue, because that's how it needs to be reported for the financial statements. But the way we're doing it is fine from a logistical standpoint. So now that the financial statements are done, or after they're done and printed out as of February 29th, we can then reverse this as of the first day of the next time period, March 1st, so that we're back to what logistically works for us. And notice it's just a timing difference that's going on here. After the guitar has been given to them, everything washes out, and it wouldn't be like, we wouldn't even have a problem if it wasn't for the fact that the cutoff date happened to happen before the guitar got here and before we shipped out the invoice. It's just a timing difference. So now we're going to reverse the adjusting entry. So the adjusting entry was to increase the accounts receivable and increase the liability. Now we're going to decrease the accounts receivable and decrease the liability. Let's go back over to the first tab. Hold down Control, scroll back down so it doesn't do anything funny as we go down and navigate through our fields down here. And then I'm going to close up the burger. I have to go to a balance sheet report, but I can't go to accounts receivable because that registers funny because of the customer fields. So I'm going to go down to that liability, which is unearned revenue, which is going to be in the other current assets. There it is down here. I want that one. That's the one. And then I'm going to open that one up. I'm going to open up another journal entry. We're going to be selecting a journal entry. We're going to put this in as of 03/01/20. That's the day after the cutoff. We're going to call it in the memo section a reversing entry. and this one is going to go down now for that $300. The other side's going to go to accounts receivable, which I think it did something funny to me when we did the, like, it wouldn't let me post there because it won't give me a customer. So I'm going to try to type it in there, accounts receivable. And I'm picking accounts receivable, and then I think it's going to maybe even kick me out when I try to save it, because note, there's no customer related to it, and it won't let me post it, I don't think. So it does that, and it says use accounts receivable or accounts payable. Choose that journal entry and enter the transaction information there. So I've got to go into the journal entry here. So what I'm going to do is I'm just going to basically record it to some other account and then open up the journal entry. So I'm just going to basically pick an account that I can record it to, something that's not going to mess anything too up. I'm going to say supplies. I'm going to record it and then note that I'm going to adjust it. So I'm going to say record, and then I'm going to go back down here and see that amount for the reversing entry. Now I'm going to use the split field, which allows me then to see the editing field, which I will then edit, and then we can see the journal entry. So it's going to be the unearned revenue is going to be the 300, and the other side needs to go to accounts receivable. Accounts receivable, but I need to assign a customer, and that customer I believe was string music. So there's string music. That's the one I want. So I'm going to type in string music. There it is. So it's not, it didn't do anything funny that time. That's good. The customer stuck where it should be. So I think we're going to be okay with that. So this is going to be decreasing the AR and decreasing the unearned revenue as of the reversing date. Let's save it and close it. Let's say the transactions you are editing has been reconciled. Okay, I'm going to say yes. And then I'm going to go back to our balance sheet. Let's take a look at the balance sheet. And we have to freshen up the report so it reports it freshly. No stale numbers. We're going to close up that hamburger, hold down control, and scroll up a bit to the 125. I'm then going to go into the accounts receivable. I'm going to scroll on down. And we have our adjusting entry. And then I got to change the date for the reversing entry. The reversing entry is in there as of 03/31/20. And then I'm going to enter that. And so then we have the reversing entry. Here is the two reversing entries. We're looking for the one for that 300. So there's the 300 that's going to correct it after, or put us back in place where we should be, so that logistically it'll work out. Then I'm going to go back to the prior report. We then have the unearned revenue. If I go into it and then I change the date up top again to the first day of the next month, and then close back down. Then we have the adjusting entry as of the end of the month, and then the reversing entry, which brings it back down. Let's go back up top and let's just look at that another way. Here's the accounts receivable as of the cutoff date, as of the end of the time period, 12,234. Here's the unearned revenue. And then if I was to change the date one day up to March 1st, the accounts receivable now is the 10,511, and the unearned revenue is down to 0, back down. Okay, and then if I look at the supporting document for that 10,511, that being this report, the customer balance detail report, and refreshing that report up, close up the hamburger and scroll back down. Now we see here for string music that we had this negative amount in there. That's the problem. Then we fixed it as of the cutoff date and took it out of there and put it into the liability properly. Then we reversed what we did as of the first day of the next time period. So we have that negative amount back there again, so that when we actually have the guitar, we can apply out the credit to the invoice that we will create at that time. That gives us a total down here at the 11,934. If we go back to the balance sheet, then I've got the 10,511, and that's because of that other invoice we entered sometime before the 10th. So let me bring this up to the or I can bring this report down. This is including all dates, and other activity happened in March. So I'm going to go ahead and say that I want a custom date here maybe, and I'll make that as of 03/01/20. Then run that report. Scroll back down. Notice it's pretty much always a date issue when there's a problem. Like, what is happening? It's probably a date issue. Think date issue first. And then there's the 10,511.10. And then if I go back up top, you see the 10,511.10 supporting. So this reports the main account, and this is the supporting schedule given the detail for it, the subledger 10,511.10.